Hello and welcome at Stocks Advisors channel. Here at our channel, we are looking for interesting buy opportunities for US-based stocks. In today's episode, we will talk about MP Materials traded at New York Stock Exchange, ticker name MP. Well, you see that MP is declining, and the most dramatic thing is that it's also declining after hours. According to Yahoo Finance, we see that actually after trading today, just let's say relatively okayish, minus 1.83%. After hours, it's already minus 6.51. And of course, for a company with a market capitalization of 7.7 billions, we know that this price action cannot take place without news. In this case, of course, negative catalyst. And this is, you can clearly see, it's that MP Materials announces proposed green convertible senior notes offering. So it's an offering, and of course the price is now going down. So how to trade on these kind of patterns, especially after being a long term on very nice upwards move from November. You see that we were going high and actually forming very nice, let's say, upwards trend, and you could see it was slightly decelerating, but in general it was going up and following the classical move with moving average 20, the green line here being the support line, and sometimes rebounding from a moving average 50, this blue line as well. And by the way, speaking of moving averages, here on the left you see these two lines depicted, moving average 20 and 50. We still don't have moving average 200, the red one, because not enough time passed to collect the information. So in general, what you see if you look at those moving averages, you see they are decelerating with some waves. So the first wave was a little bit encouraging, proposing that we could go higher, but the second wave that took place from end of January or beginning of February, beginning of March, it was broken. You see it's broken here, and now it's going slowly. So technically, even it was already about to, let's say, to correct, although here this previous day white candle misled people a little bit. Also, people were buying a lot. You can see the volume, but in general, of course, once you see on this upwards move a broken wave means it looks like this, so like a shark's back, and it's exactly what you see here. It means that if not immediately, but soon, and soon meaning that in 1, 2, 3 weeks, depending on the stock, of course, and depending on its market capitalization, the correction will take place. So it was already calling for a correction to the level of about 30, at least as a first level, and now with this news already being minus, let's say 6%, again to show you we're at 42.21, and this means that we actually might decline a little bit further as well. So therefore, how to trade here? In general, of course, we need to go for, let's say, deeper support levels in order to be able to, let's say, make a profit from this corrective move and the offering. And with this being said, we just need to see here the two major levels. So the one is between 34 and actually 38, which is just below, in this case, moving average 50, the blue line. Why this one? Because moving average 20, the green one, will not work anymore as a support level. So the first ever possible technical support level here would be here between 34 and 36. So if we write it here, this would be 34 to 36. So with this being said, this will be actually the first entry opportunity, and then should the price decline, which might also be taking place, so if it rebounds, of course it will be still quite nice rebounds, and we might take nice profit. And speaking of profit here, on these kind of charts, we always advise 10 to 15% from the money allocated in the position, and it's really nice to take it and enjoy. Never be too greedy. Don't try to become rich from one trade. Become rich from trading multiple times positively. That's the only way, believe me. If you don't do it like this, it's only kind of a casino style. Might happen with you, of course, that you will win from one trade, but usually this is not possible, systematically speaking. So with this being said, this is the first level to enter. Should we rebound and make this profit 10 to 15%, you can take it. Should we continue further, depending on how market will react on this offering, then of course we need to anticipate lower levels, and the lower level of support, which here will be this channel where the previous step was forming, will be between 24 and 28. Yes, much lower, but also severe correction might take place here on this news. And also, it's not only news, as I just said at the beginning, there was still an expectation for a technical correction because of this broken wave. So actually, these are two negative catalysts, if you can call them like that, combined. So if first is expectation for a correction, this was the technical expectation, and secondly, of course, it is the news. It is the offering. So with these two, it might go a bit lower, and it can make between, as a second channel, between 24, 28. And then, in general, it should be okay to stop, because also a company with a big market capitalization, it should start decelerating. But if we have further negative confirmation, which is also can be, then we need to really speak already of mitigating the risks of that. And speaking of mitigating the risks, we need to go to very principal levels of support. And the principal level of support will be here, where the most principal previous channel stopped and the new one started. Therefore, it will be that one. Again, this one is not that we expect. We still can expect S1, S2, and S3, S4 based on the current situation, but this lower one is just to mitigate risks, in a sense that if any secondary wave negative catalyst comes, people probably will be taking losses and exiting. You will, in that case, just entering again and still making profit overall with 10 to 15% from the all money allocated in the position. So that's an idea. That's the part of our so-called mixed analysis, which is based on three pillars. The one is technical analysis, second is nonlinear averaging down. That's what we discuss here, based on support resist channels. And the third one, of course, is mitigation of the risks due to some negative catalysts coming, which are very difficult to predict, to expect, but you can still know how to behave if they would come. So from this point of view, this is the level to enter. Speaking of other parameters, still, of course, it was nice MACD forming, just hoping for a double wave and push up. That's why the previous day there was a white candle, so everyone was preparing for one small jump before major correction would start. Again, classical behavior after this shark back profile, but instead we see already the decline. And RSI, of course, is just in the middle, so it's indecisive, could go either way, and now looks like it will go a bit lower into the area of oversold. So with this being said, this is the way to play. So this is the numerical card. If you are more for graphical analysis, you could look here on the right. And again, whenever you have the rebounds, you can take the profit. It's really advised to take it 10 to 15%. And speaking of how to non-linearly averaging down, do it here. It's still positive, so it's still 5 portions play, meaning you can enter with 1-2-2 strategy. So what does it mean? It means that the funds you would like to play here, you can split in 5 portions. Then you can buy with 1 portion in the first channel, with 2 portions in the second when needed, and again with 2 portions if secondary negative catalyst will come and shoot the price really to the previous levels. So then it should be quite nice, the best optimization for profit versus loss in this case, with major risks mitigated based on principal support resist levels for MP materials. So on that, that's all for MP. Good luck with it. Do not forget to subscribe to our channel for the first time watching this video. Please also press the bell button. This way you will not miss our new videos and new interesting discussions for US-based stocks.